You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, what are we seeing on the futures market?
Well, the futures are reflecting harvest pressures, and we've seen closes yesterday on Thursday, the September 19th, of D's corn at 405 and three quarters, November beans at 1013 and a quarter, and again, that corn is generally down about uh, down about 7 cents, a little bit negative on soybeans. Wheat was down about 13, 14 cents in across the various contracts. D's hard red winter wheat 564 and a half. We've seen a lot of volatility up and down in the last bit of time. And I think when you look at the trends in prices, we basically we're at price lows about 2.5 to 3 weeks ago. For D's corn, we were down at about 385, now jumped up to just under 420, and now about 405. So really just a little bit of harvest rumors back and forth, and weather issues coming into play, but not a lot going on. Still, as we talked about, it's harvest time for soybeans, the other big crop in harvest mode, along with sorghum, of course. We were down at lows of about 950 2-3 weeks ago, week and a half, 2-3 weeks ago, and got up to just under about 1030 or so, and closed yesterday at 1013. So we're kind of biding time, waiting for the major harvest pressure to hit. For hard red winter wheat, that's a little bit of a different critter. Of course, our harvest is long done for that, but we had seen the wheat markets had dropped down to about 525 during that same really low bearish time frame, jumped back up to as high as 6, and now closed about 564 and a half. We had some financial market announcements that came out with a little bit. The Fed stepping in, taking actions that would generally weaken the U.S. dollar, which you'd think would be positive for U.S. wheat exports, but the markets responded low. From what I've read of different reasons, they're following the lead apparently of what happened over in France and Europe with regard to those markets. So not a lot of changes, and of course those futures changes affected the cash markets. Are seeing. We have seen a little bit of recovery in the bellwether corn market in Southwest Kansas, Garden City, 30 over. We had been down to about 10 or 15 over at the most, and for that area, that's kind of a pretty much a weak basis. But interesting, in that Garden City area, I saw both the old crop bid and the new crop bid at new crop 2025 bid, both at 30 over. 436 for the current cash bid. Again, harvest just around the corner, if not happening. Wet corn already have gone on. 476 for fall 2025, but both 30 over. So you wonder, why this far out, why would that be the case? I think they're probably trying to send positive signals for the corn enterprise going forward, and elsewhere around the state. About 9 over in Hutchinson at 415, 10 over in the Colby area at 416, and elsewhere all below 3, ranging again that Topeka area, highest price 371 cash market, 386 in Columbus, 396 in Salina. So for ag producers, for corn growers, they're looking at prices at or below $4 in a lot of cases, and be interesting to see if they decide to store or sell. It'll depend on their storage situation. And these are the listed elevator prices. There may be processor prices, direct ethanol plants, some to livestock feeders that are better than these listed numbers. But at least as we sit right now, you've got that, got our current $4 or below in a lot of the state, except in these out to the west and there in South Central. Grain sorghum cash bids all negative basis. The highest bid in the state in Hutchinson at 395, 391 in Colby, and 395 in Salina. And 386, 375 thereabouts other places. Soybeans all below 10. for this marketing year. It's interesting for the next marketing year. You've got a couple places with bids at $10 or higher. One down in the Columbus area in Southeast. So that's no doubt tied in with the expectations of either shipping on the river or going to plants for processing in Topeka area. Again, processor nearby. And when you look at wheat markets, then again, nothing great going on. We talked about how there's actually some positive news, a lot of positive news to wheat markets, but still pretty low prices. Highest cash price, Hutchinson area at 559, only 5 under, and then you've got Salina at 544 at 20 under, et cetera. And mentioning wheat, there's we've come into a situation with these low prices where we've really spurred on some wheat export movement, and that's both for hard red winter wheat, hard red spring wheat. So all for the good. So we had a week for the week ending September the 12th. We had actually shipped out 6.3, 6.4 million bushels of hard red winter, and we need a pace of about 4.9 to meet the USDA's projection. So really positive. Hard red spring wheat, 8.7 million bushels of shipments, and we need about 4.6 to meet the USDA's price. Shipping goals, or targets in their WASDE report sheet. So that was all good. And I'd say for wheat, you still have the situation where we're at world minus China stocks to use 18, less than 19%, 18.8, haven't been there since way back in 2015, 16. And I think we've gotten to the place where if there's any more worries about what's happening in the Black Sea region, then that does eventually send that, combined with the tighter world supplies, does bring some business to the U.S. shores. We'll talk more about soybeans next week, but big news in the soybean side is just a tremendous sale of soybean oil, X times bigger than normal this week. So that's lent some support to soybeans, as well as U.S. prices being quite competitive with that out of Brazil, and dryness in Brazil. I want to finish comments on with regard to corn. The next WASDE report comes out, I think I think it's October the 11th, I believe, 10th, 11th, 12th, somewhere in there, and still the market's going back and forth, waiting for harvest reports to confirm high yields or not. And you can put together different scenarios on where prices will go. And I've tried to work with some of that and if we get the current USDA projection of 183.6 bushels per acre, 15.18 billion bushels, you end up with ending stocks just a little over 2.06 billion bushels. And the USDA projects for about 14% stocks to use, about 410. However, you keep taking about a bushel and a half off of that, then if you for 182 bushels per acre, and again the old record is 177.3, then you end up with about 15.1 billion bushels. Ending stocks now at 1.9 billion bushels. Prices, by the time you look at season average prices with that type of stocks to use setup, you're under 13% stocks to use. You're looking at 450 per bushel, and that's a sizable difference. That's a big deal, quote. So there's a lot riding on where these harvest reports finally come. And by the way, when you look at futures in the last few days, they're pretty much forecasting about a $4.50 price for this market year. So the USDA is projecting 410, futures at about 450 by the time you look at the carries out into the future. If by some surprise we get out in the fields and yes, everything outside of Illinois and Indiana doesn't come out as well, you're down at 180.6 bushels per acre. Ending stocks about 1.8 billion stocks to use. Just over 12, and really a price with those relationships at just under $5. So here in the midst of really pretty low prices. You've got us from Kansas State talking about where, if we don't hit these lofty yield goals, there are repercussions. So all that much more, we'll be watching harvest results, harvest yields to see if we, instead of getting 183.6 bushels per acre, we get closer to 182 or 180 and a half. If that happens, that's tangible impacts on prices and will affect people's storage decisions also for corn. So we'll see where all that goes, I guess, in coming weeks.
Dan, I appreciate you taking the time to join us today and give us our weather update.
Thank you very much, Shelby. I appreciate it.
That was Kansas State University grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.